morning, everyone. This is Amit Pawari, founder and managing director of CR Forex. What a week it was. Equity market across the globe fallen, cryptocurrencies fallen, gold broken its key support level of 1860, dollar index finally traded above 104 level, and dollar rupee pair finally broke 76.95 ka level. Now we have been getting calls from a lot of people asking when dollar rupee pair will move towards 78 to 78 and a half level. Let us discuss the same in this presentation today. Now, before touching 78 to 78 and a half level, we think that dollar rupee pair will enter into a consolidation phase between 76.80 on the lower side and 77.60 on the higher side. There are three main reasons for the same. Pehla, we have seen a sharp fall in all asset classes in last 2 weeks. Generally, after a sharp fall, we expect a bounce back in all asset classes. So equities will give you some kind of a bounce back next week. That is reason number one. Second reason, during the week we have observed that RBI was acting like a wall for dollar rupee pair, not allowing it to go above 77 and a half level. It has intervened in the spot market. It has intervened in the forward market. It has gone and intervened in the NDF market also. So because of RBI selling pressure, we expect the pair to continue to in a consolidated range. And the third reason, in the coming 2 weeks, we are expecting some kind of inflows in terms of MSCI rebalancing. Because of all of these three reasons, dollar rupee pair will enter into a consolidation phase. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporter. Basically, they must have taken costing close to 76.80 to 77k levels pay. For them, we suggest that they should cover 85 to 90% of their exposure close to 77.30 to 77.50 levels. For 10-15% of the exposure, they can keep it open with a strict stop loss of 77.10 or costing whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or an engineering exporter or pharma exporter. Thick margin exporters, those who have waited based on our advice, have got the benefit. They got 77 and a half level, and I hope that they must have definitely covered some exports at those level. Earlier, we have advised them to maintain a hedge ratio between 45 to 50%. Now we suggest them to increase their hedge ratio, and they should be ideally covered between 50 to 53% of the total export. And for further booking, they can wait with a stop loss of 76.50 as the entire trend is on the weaker side. Strategy for importers. From last 2-3 weeks video, we have been saying that if 76.95 is taken out, then the pair will directly move towards 78 to 78 and a half level. But luckily, RBI intervened in the market, and it has not allowed the pair to move above 77 and a half level. So those importers who have not covered their imports for next 15-20 days, they can keep a stop loss of 77.60 and wait for a pullback towards 76.90 to 77.10 level. If they get those level, they should definitely take an opportunity to cover for their next 20-25 days import. Now let us discuss trading ideas for coming days. We had given 3 calls. Euro USD target got achieved. Someone who have traded made a money of close to 1.35 lakhs rupees. JPY INR stop loss got hit. Someone who has taken the call must have made a loss of 60,000 rupees. USDINR मंडे मॉर्निंग गैप ओपन हुआ तो चांस ही नहीं मिला ट्रेड को एग्जीक्यूट करने के लिए. सो दिस वाज द समरी ऑफ द 3 कॉल्स. Now for the coming week, there are no trading calls. Trading call has gone into a resting mode where we have to see and find ideas for the coming week. So till that time, Jai Hind, Namaskar, thank you and फिर मिलेंगे.